Alright, hi everyone. Sorry. Welcome to today's webinar brought to you by IC Markets. Right, sorry, had a little bit of technical issues at the start, but alright, everything seems to be good. Alright, thanks everyone for tuning in today. Hope you've had a great weekend. Alright, I think we're good to go. Alright, okay. Once again, hi everyone, welcome to today's webinar brought to you by IC Markets, where we'll be covering the pre-market live analysis. Alright, before we start, let's go through the disclaimer. Right, so please take note, this is marketing communication. It does not contain, it should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, so it's a simple agenda for today. So we'll cover the key economic events that are going to be released this week, and we'll cover the analysis on the majors, and of course, at any point during today's analysis, do not hesitate to drop your requests for any instruments, or currency pairs, commodities, or even the indices that you may have in the chat box. Alright, hi Ayas. Good to see you. Thanks for tuning in. Right, so my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, right, 2019, 2020, and 2021. Alright, so here's the calendar for this week. Right, so this economic calendar is from Forex Factory, and I'm on GMT time. Alright, so there's quite a few things going on here. So we've got three central banks lined up this week. Right, we've got the RBNZ, Reserve Bank of New Zealand, that will announce its official cash rate on Wednesday, 10th of April, 2 a.m. GMT time. We've also got the Bank of Canada that will release its own monetary policy statement on the same date at 1:45 p.m. And on Thursday, we have the ECB dropping their monetary policy statement, as well as the press conference by ECB President Christine Lagarde later on that day. So in addition to the three central bank announcements, we also have inflation data out of the US. We've got CPI data on Wednesday, and we've also got PPI data on Thursday. Right, hi Ayasa, glad to see you've joined us as well. Alright, explore world dollar yen. Yep, it's one of the majors, so we'll be covering that as well. And we'll look at gold. Yes, gold is trading at all-time highs. We don't see any real ceiling for it, so we're going to when we come to the analysis for that chart, it's going to be really interesting, right? So yeah, so let's start off with the dollar index. We'll look at dollar yen, and then we'll go to gold, and then also we'll cover the rest of the majors and some of the other commodities as well. All right, okay. So before we start, we've got CPI data coming up, right? So if you look at the calendar, right, in addition to the three central bank data, we've also got CPI on Wednesday, 12:30 p.m. GMT time, and core and PPI data on Thursday. So just looking at CPI, these are the estimates for March. Right, on a monthly basis, core CPI is expected to gain 0.3%, headline CPI is expected to gain 0.3%, both of which are lower than February's result. But however, when we look at CPI on an annualized basis, we see it increasing, or it is expected to increase from 3.2% to 3.4%. So on the left is the chart for annualized CPI, and on the right we have this chart for annualized core CPI. So when we look at headline CPI, right, we can see it go from about 3% to 3.2%, and for March it is expected to increase even further to 3.4%. So this suggests a potential re-acceleration in inflation at an annualized basis, right? So if we see a set of data that comes in higher than the respective estimates, right, Remember, we have month-on-month CPI data as well as the annualized CPI data. Should we see a set of data that shows inflation rising much more stronger than anticipated, which is what we saw over the last couple of months, this is quite likely going to fuel demand for the dollar as well. So we're going to see, we could potentially see a return of the dollar bulls on Wednesday. All right, hi Ren. Okay, we'll definitely cover, yeah, pound yen, pound dollar, Aussie dollar as well. All right, hi Nick, great to see you join us from Australia as well. All right, excellent. All right, okay, then moving on, we've got the RBNZ. Right, they are going to drop their monetary policy statement on Wednesday, 2 a.m. They've currently held their cash rate at 5.5%, right, which is something where markets are expected them to do so, right. They are not anticipated to cut rates yet, because when we look at inflation in New Zealand on an annualized basis on the left, remember on the left I have the chart for annualized CPI, on the right I have the chart for the core CPI. We can both see they're about, headline CPI is probably around 4.8%, core CPI is about 4.4% on an annualized basis, right, well above the RBNZ's target of 2%. So although inflation is trending lower over the last few quarters in New Zealand, it is not falling sharply enough. So this may mean that the RBNZ is quite likely to keep interest rates on hold at 5.5%, right. Okay, then moving on over to the Bank of Canada, they've kept their overnight rate at 4.5%. However, when we look at inflation data in Canada, once again on the left I have the headline CPI data on the left and the core CPI data on the right, both on an annualized basis. We can see they've both moderated lower quite steadily. Headline CPI is probably about, I think this is about 2.4, 2.5%, and core CPI is probably about 2.1, 2.2%, inching ever closer to the target of 2%. So given how inflation has moderated quite significantly in Canada and does look to be inching closer to its target, I think it's quite likely we may see the Bank of Canada cut rates this week, right? So it should come as no surprise should they cut rates, right? So I think we can probably just be mindful of this, that Bank of Canada may cut rates this week, given that inflation has actually moderated quite significantly and is very close to its target of 2%. All right, this is the main refinancing rate for the ECB. It currently stands at 4.5%. Similarly, when we look at inflation in the euro area, it has moderated significantly as well. So on the left, I have the chart for headline CPI. On the right is core CPI, both on an annualized basis, right? Although still a little bit away from their target of 2%. I think March data is, let me see, what is the data for March? I believe the data for March is at, yes, I think it's about 2.5%, 2.4%, and core CPI is probably about 2.8, 2.9. So we can see they've edged quite lower. So even for the ECB, after we saw the Swiss National Bank cut its key policy rate about 3 weeks ago, right, and given that inflation in the euro area has been pretty much subdued as well, I think it may not be I think it can be quite realistic to expect that the ECB may cut rates this week as well. Alright, so take note, we've got 3 central banks coming up. RBNZ quite likely to keep interest rates on hold. Bank of Canada could potentially cut rates this week along with the ECB, because as we see, inflation in these two, in Canada and the euro area have moderated lower quite significantly, whereas in Canada, inflation is still sticky, is still stubbornly sticky. So we may see RBNZ that's going to keep its overnight or its cash rate on hold at 5.5%. Right, okay, so with that, let's move on over to the charts on TradingView. Alright, Nick, for sure, we'll definitely we always start the analysis on the dollar index, right? Because once we do the analysis on the dollar index, we have a great overview of what we can expect for the rest of the currency pairs as well as for gold prices as well. So definitely we'll be starting our analysis with the dollar index, of course. Alright, okay, so alright, here I am on the chart for dollar index, right? I'm on a daily time frame. So as you can see, since middle of March up till Monday, 1st April, the dollar index rebounded pretty strongly, right? Rebounding from about 102.70 to as high as 105.10, right? So on 1st April, after 1st April, we saw the dollar index peak at about 105.10, and for pretty much most parts of last week, we saw it pull back quite sharply, right? It did find strong support around 104, around the level region of 104 on 4th of April. It initially rebounded higher on Friday. However, we saw it sell off as well towards the end of Friday, right? Even though we had NFP data, right, we had non-farm payroll that was released on 5th April, which showed jobs data coming in much more higher than anticipated. However, that wasn't enough for the dollar index to continue rising higher, right? So we do see continued overhead pressure for the dollar. So perhaps as markets open this week, we could see this downward slide in the dollar index resume on Monday and Tuesday, and when inflation data is released on Wednesday, we could potentially see the dollar index rebound on Wednesday, right? Especially if the data shows inflation re-accelerating or coming in hot once again for the month of March. All right, hi, yes, okay. Part of the reason for the rebound in the dollar index was non-farm payrolls. We also had non-farm payrolls on Friday, 8th of March, right? This was for the month of February. Then on Tuesday, 12th of March, we had CPI data, which came in hotter than expected. And finally, on Thursday, 14th of March, we had PPI data, which is Producer Price Index, also came in higher than anticipated. So we had three sets of data over this period that signal a robust and strong US labor market, as well as inflation potentially re-accelerating in the US. So we had hotter than expected inflation data plus strong NFP data on the 8th of March. This week here, 8th of March all the way to the 14th, we had three sets of data that showed inflation coming in higher than anticipated and a strong labor market, which is part of the reason for the US dollar or the dollar index to rebound pretty strongly over this period. Right, now as it ran into resistance here, remember this level here at 105 was the previous swing high resistance that occurred in the middle of February. It's a region where once again selling pressure has increased, so this could be a combination of profit taking as well, right? Part of the reason for the dollar index to pull back last week could be profit taking, as the index reached this level at 105. Perhaps a lot of traders who were long on the dollar index here decided to start naturally taking profits here as it approached this major swing high resistance, right? So last week we saw stronger than anticipated non-farm payroll once again. However, we saw the dollar index actually pull back towards the end of Friday. With that, so perhaps we could see dollar index being potentially weaker on Monday and Tuesday, right? Initially we could see dollar index continuing to pull back, and this is why we've identified the pivot level at 104.14, which is an overlap support level that aligns well with the 38.2% Fibonacci retracement. So potentially we could see dollar index continuing to slide lower for the first half of the week, and then when we see inflation data on Wednesday, we could see, and especially of course if inflation comes in hotter than anticipated, we're likely to see the dollar index rebound once again. All right, okay, so in terms of resistance, it's quite clear where the first resistance lies is around the region of 105 rather, right? We look at this region here, right, between 105.10 and 104.90. It is a pretty strong multi-swing high resistance here. Remember previously back in November of 2023, this level functioned as the pullback support, and then on 14 and 15 of February, as price ran into resistance and dropped lower, this pullback support then turned into an overlap resistance, which is currently being respected as well, right? So first resistance, no changes to where the first resistance is. Now first support is another overlap support, significant overlap at 102.67, right? We can see price finding strong support here on 29th of November. Then as price broke underneath it, it ran into resistance here on 19th of December, as well as, and the second week of January as well, right? And then of course it found strong support in the middle of March. So you can see this overlap level here at 102.67 is clearly a significant support level where price has bounced off very strongly, right? So should we get should we see the dollar index continuing to slide lower, and if we see inflation come in soft, that means we see inflation missing its estimates, then that's very likely going to cause the dollar index to sell off pretty hard as well. And should that happen, we're likely to see it break below the pivot point and drop towards the region of the first support at 102.67. Right, yes, that's right. If the dollar index if the dollar index sells off, continues to sell off, we are likely to see gold prices pushing higher as well. Right, okay, so these are the key levels for the dollar index, right? If you were to see where the next resistance level would be, if I were just to highlight where the next resistance level for the dollar index would be, it would probably be around this pullback resistance that occurred on the 10th of November, right? If you look at 106, the region of 106, this would be where the next resistance level would be for the dollar index, right? If it breaks above this first resistance at 105, right? Is there any Fibonacci retracements that we could use? Let's just explore and see if there's a 78.6 around this region here. Right, okay, so we do have a 78.6% Fibonacci retracement around where the second resistance lies, but since the index is trading quite far from this level of 106, for now let's just remove it. But it's just to give ourselves an idea of where the next potential resistance level for the dollar index could potentially sit should we see it break above the first resistance here, right? And of course for the first support is very clear. Should that be broken at 102.67, then quite clearly the next support is likely to be around the swing low that occurred on the 28th of December. Alright, okay, with that let's move on down the list, right? We've also got the ECB coming up, so let's look at the euro, the pound, dollar yen, of course the Aussie, and then we'll go on to gold as well. Alright, okay, let's move on down the calendar. Let's quickly look at the euro, right? Of course, if the dollar was falling since the middle of March, right? So the dollar was rising strongly in the middle of March, it is expected that euro USD would of course naturally be dropping as well. And with the dollar peaking on the 1st of April and started to pull back, euro dollar has rebounded as well. So should we see the US dollar continuing to sell off in the beginning of the week, right, then we could see a potential rebound in the euro as well. However, take note, there's also a descending trend line that I see on the euro, right? Remember, we're on the daily time frame here, right? As price made this swing high resistance on 26th of December, it made another mini swing high resistance on the 11th of March, right? We can see a descending trend line here that has captured the market structure several times, right? You can see it capture the top of the wick a few times. So this descending trend line here does look to be pretty significant. So although we may see the euro rebound from this pivot point at 1.0808, however, take note that this descending trend line has been an area of strong resistance in recent times, right? So we may see a weak rebound in the euro in the first half of this week. Right, first resistance is quite clear, right? As I mentioned, this is a swing high resistance that occurred on the 7th of March, and we also have a pullback resistance that occurred on the 8th of January, right? So this level here at 1.0975 is our first resistance. We've also drawn a Fibonacci retracement here, so we started this retracement from here, this swing high on the 27th of December, ending with this swing low here on the 13th of February. We can see that this is a 61.8% Fibonacci retracement, so it's not so clear because it's being masked by the candles, but you can see this is a 61.8% Fibonacci retracement level that aligns very well with our first resistance. Of course, should the euro break above this first resistance, then very clearly the second resistance is going to be at this swing high resistance that occurred at the end of December. Right, in terms of support, there's a pretty decent overlap support as well at around the 61.8% Fibonacci retracement, right? When we look at this level here, right? We can see price bouncing off the 61.8% Fibonacci retracement a couple of times. So we have a pretty strong uh, support zone, right? So the support zone starts from the 61.8% Fibonacci retracement down to this overlap level here at 1.0668, right? So this 61.8% Fibonacci retracement was found by starting the retracement from here, this swing low on the 2nd of October, going up to the swing high here on the 27th of December, right? So we have this very strong support zone for the euro between 1.0713 and 1.0668. Right, right. So yeah, so if we are expecting the dollar index to continue selling off in the first half of the week, then of course we could see euro dollar rebound quite higher, right? Looking at this candle here, right, when we look at the candle on Friday, oops, where did we go? And when we look at the candle on Friday, right, we can see that the euro dropped as low as 1.0719, but actually after that it rebounded pretty strongly to move higher as well. So we did see a lot of buying for the euro USD coming on Friday, of course, as the dollar index sold off, right? So it's quite likely we may see this mini rebound here resume in the first half of the week. All right, but however, take note, we have this descending trend line here, which has helped us to identify a pretty strong area of resistance. So once again, should price come up towards 1.885 or 1.0890, we could potentially see the euro stall around this region as well. All right, okay, let's move on over to the pound. Then we look at dollar yen. Right, similarly here, when we look at the candle on Friday, the daily candle on Friday, we see this very long wick here. So we saw the dollar sell off pretty strongly that day, and we saw, of course, demand for the pound pick up as well. So similarly to the euro, we may see the pound continuing to rebound a little bit higher. The pivot point has been identified at 1.2523, right? We can see this is a strong pullback support level, right? Price finding support here on 7th of December, 5th of February, we can even argue 15th February price found pretty decent support, and of course on as recently as last week, 1st of April as well, right? So you can see price has bounced off this level several times, right? So this pivot point is actually a pretty strong pullback support level, which is where it does seem that price seem to has found decent support once again last week. So we could see the pound continuing to rebound higher in the initial part of the week, right? If we look at the price action here, right, since the 7th of December, we can actually argue that the pound has been trading sideways, right? It's actually been bounded between 1.2520 and approximately 1.2800, right? Of course, we do see it climb as high as 1.2893 here on 7th of March. However, if you look at it, it's actually been trading sideways over the last, I would say, 10 weeks now, right? So over the last 12 to 14 weeks, over the last 12 to 14 weeks, actually no, even longer, since mid-December, right? So since mid-December, yeah, so almost 4 months the pound has been trading sideways. So we could see it rebound this week as well and drive up towards this resistance level here. So there's a pretty decent intermediate resistance at 1.2794, right? As you can see here, price running the resistance here on 14th of December, 27th of December, and even here over this period, you can see price, the pound failed to break above this pullback resistance level here, but because we saw it break above 1.2800 on 7th of March, hence this level at 1.2794 is an intermediate resistance, and the first major resistance for the pound comes in and in this region between 1.2860 and 1.2890, right? Which is also this region here, this pullback resistance here is also a region that aligns well with the 78.6% Fibonacci retracement. So we started this retracement from here, this swing high here on the 13th of July, ending with the swing low here on the 2nd of October. We can see that the 78.6% retracement level aligns quite close to the first to the region of the first resistance, right? First support is this overlap support level here. We can see initially price running the resistance on 2nd of November. This was previously a pullback resistance, and as price broke above it and then found support, what was previously a pullback resistance has now turned into an overlap support at 1.2389. Right. Similarly, when we draw Fibonacci retracement on this uptrend here, right, we started this retracement from here, this swing low set on 3rd of October, going up to this pullback resistance level here on 7th of March. We can see that the 61.8% Fibonacci retracement aligns quite well with the overlap support as well, right? Is there a 50? I don't think so. Let me just check. Let's just check if there's a 50 or 38 that could be potentially used. No, not 50, not 38 as well. Okay, so it's just 50% over here. Alright, so these are the key levels for the pound, right? We had a request for dollar yen as well, so we'll do that dollar yen, then we'll go down to the Aussie, and we'll cover the Kiwi as well, since we've got the RB NZ as well. Alright, so when looking at dollar yen, right, if we just zoom out a little bit, we can see the previous high for the dollar yen came in October of 2022, right? This is a multi-swing high resistance at our pivot. So this pivot point is actually a multi-swing high resistance level, right? We can see a very strong swing high resistance that occurred in October of 2022. It's also a region where price once again ran into very strong resistance in October and November of 2023, right? And then we saw dollar yen pull back pretty sharply towards the end of last year. And now once again, as dollar yen has rebounded strongly, it has once again run into resistance here, and it has been has failed to break above this multi-swing high resistance since the 18th of March, right? This is just to give us a sense that the level of, or the region of 152 is indeed a very significant resistance area for the dollar yen. Right, so now as we zoom in over to where this currency pair is currently trading, we can see, right, as I mentioned, since the 18th of March, 19th of March, dollar yen has failed to break above this level here, so we could potentially see it once again run into resistance at this pivot point, and we've identified at 151.90, and it could potentially slide lower here, right? So if you look at the dollar yen and the price action since the end of January till now, right, you can sort of argue that it's been in a sideways trading range as well, right? When we look at it here, right, within this region here since 31st of January, we can also see that it has been bouncing off these two levels, right? So it's been bouncing off the first support at 146.40 and the first resist or the pivot at 152. So it's sort of been trading sideways pretty much over the last 8 or 9 weeks, right? So potentially we could see, especially since if we think the dollar index is going to continue selling off in the initial part of the week, it's quite likely dollar yen is going to pull back as well, right? So as you can see, it's been trading sideways since 31st of January, and it's also trading very close to a major multi-swing high resistance, which has been identified as the pivot point here. So it's quite likely we could see the dollar yen pull back as the new week kicks off, right? With regards to the first resistance, we've identified it at 155, right? This is a region, this is a level that aligns very well with the 127% Fibonacci extension level, right? Because when we zoom out and look on at the dollar yen on the monthly time frame, you can see it's actually trading right close to its all-time high, right? The previous all-time high for dollar yen was at about 147.60, which occurred in August of 1998, right? Okay, it's not the all-time high, pardon me, it's not the all-time high for dollar yen, but it is at a region where it's pretty elevated if you look at how this currency pair has been trading over the last 25 years or so, right? So the previous high, the next major resistance for dollar yen is probably going to be at around 158. So let's just put this in here and see where it actually sits in the current context. Right, so dollar yen is trading at a very high level, right? It's a very high level since over the last 30 years. It is not the all-time high, but it is at elevated levels here, right? So if you look at this previous swing high that occurred, I believe in 1995, right? It's at about 160. It's pretty far from where price is currently trading, but yeah, it's just something to take note of where dollar yen could potentially reach should we see the first resistance being broken. However, like I said, 152 has been a very strong multi-swing high resistance since October of 2022, and first resistance at 155.10 has been identified by a combination of a Fibonacci extension at 127%. Right, so we started this retracement from here. Let me zoom in a bit. We started this retracement from here, this swing high here on 13th of December, ending with the low here on 27. That's how we got the 127% Fibonacci extension. We also have a Fibonacci projection here at 78.6%. So this projection involves 3 points. So we started from point 1 here on 27th of December, going up to point 2 on 12th of February, and ending at point 3 on the 7th of March. So what we have here, the first resistance is a confluence between the 78.6% Fibonacci projection and the Fibonacci extension at 137%. So this adds to or helps us identify a pretty significant resistance area for dollar yen. Alright, let's move on down to okay, since we've got Bank of Canada, so it makes we should be looking at dollar CAD today as well, Aussie and Kiwi, and then finally we'll wrap up with gold. Alright, so similarly for dollar CAD, if you look at it since 6th of February till present time, right, you can see it's sort of been trading sideways as well, right, after rebounding pretty strongly at the end of December. This currency pair has been ranging between 1.3450 and 1.3630, right, pretty much trading between this range here, right. So once again, it ran into strong resistance on Friday here, briefly breaking above the first resistance at 1.3629. However, you could see it pulled back pretty strongly once again. So I think this sideways action for the dollar CAD is likely to continue here, and especially when we see the Bank of Canada announce its monetary policy statement on Wednesday, right? Take note, if they do cut, if the Bank of Canada does cut, that means it's likely going to cause the Canadian dollar to sell off, of course, and that means the dollar CAD is quite likely to bounce higher, right? That may be a catalyst that is required for dollar CAD to break above this first resistance should we see the Bank of Canada actually cut its interest rates this week. Alright, this first resistance zone here, as you can see here, is a pretty strong pullback resistance level here, right? Price running the resistance since the 27th of December, and also we can sort of argue back in 17th of October till 14th of November, price has managed to find support above this level here, and it's also a region that aligns well with the 61.8% Fibonacci retracement. So we found this retracement by starting from here, this swing high on the 31st of October, going down to the swing low on, where's the absolute low is on, the absolute low is on here, 26th of December. So we have the 61.8% Fibonacci retracement aligned pretty well with the first resistance here. Similarly, for the first support is a strong pullback level here. We see price bouncing off this level here on 8th of February, the 21st, and as well as on 7th of March, and even we can argue here as well, 20th of March as well. So this is also a strong pullback support level that aligns pretty close to the 38.2% Fibonacci retracement. So this retracement once again was started from 26th of December, and we ended it here on the 5th of April. We can see that the 38.2% Fibonacci retracement aligns quite well with the first support. So we have a pretty strong support zone between 1.3445 and 1.3470 here, right? So there's no major direction for dollar CAD here. I would say, right, as I mentioned, it's been ranging sideways between these two regions here since the 12th of February. Perhaps what is needed for this currency pair to break out of this zone would be the monetary policy statement announcement by the Bank of Canada later this week on Wednesday. Right, okay, let's look at Aussie, and then after that there's a request for the Aussie as well. Then we'll look at the Kiwi too. So right, so remember, if you are expecting dollar index to to continue to slide lower, right? Especially Friday, right? It sold off pretty strongly. It's still closed in the green on Friday, but you can see that this wick here, this very long wick, we saw a lot of selling pressure for the dollar index on Friday, which is quite likely to continue in the beginning of this week as well. So should that happen, we are likely to see the Aussie rise higher, rise towards this pivot point here. This pivot point is actually an overlap resistance level at 66.50, right? We can see initially price finding support here in the beginning of January, then it ran into resistance here in the middle of March. So this creates an overlap resistance level, which is where the pivot has been identified. Right, so we could see the Aussie continuing to rise higher in the beginning of the week, and where you could run into resistance is this pivot point here at 66.50, which is an overlap resistance level. This is also a level that aligns well with the 50% Fibonacci retracement. Right, if I look at this retracement level here, so we started this retracement from this swing high on the 27th of December, going down to the swing low here on the 12th of February. We can see that the 50% Fibonacci retracement aligns quite well, right, with the overlap resistance here. So I'll just highlight it as a zone. Right, no surprises to where the first resistance is. We see, right, there's no other major resistance in between. We see a very strong swing high resistance that occurred here on the 26th of December, right? When we look at the market structure, this is a very significant swing high resistance here, right? So this is quite clearly where the first resistance is going to be. Right, there may be some intermediate resistance levels around here. Perhaps if we look at where the 61 and 78.6% Fibonacci retracement level lies, right? This regions here, this levels here at about 67.10 and about 67.80 could be areas of resistance as well, should we see the Aussie break above the pivot. However, the first major resistance when we look at the market structure, right, is this swing high resistance here that occurred on that occurred at the end of December. However, right, take note that we may see the Aussie run into resistance around the area regions of where the 61 and 78.6% Fibonacci retracements lie as well. All right, in terms of support, we can see quite clearly price finding strong support here. Price finding strong support here at the end of February and in the beginning of April as well. So this is a pretty strong pullback support level for the Aussie at 64.76, 64.77, which has been identified as our first support, as also a region, a level that aligns quite close to where the 78.6% Fibonacci retracement is. So we started this retracement here from this swing low on the 12th of February, going up to this pullback resistance here on the 7th of March. We can see that the 78.6 retracement aligns pretty well with the first support. Right, next up we have the Kiwi. Right, so when we look at the Kiwi as well, we see a strong pullback resistance level here at 61.99, pretty much 62 cents here. We also see a strong swing high resistance that occurred here at the end of December, right? This is a strong swing high resistance as well, and of course a strong pullback resistance level here. Right, so when we look at the candle for Friday, although it did close down on the day, we do see this long wick here that does seem to suggest a lot of strong buying pressure for the Kiwi. So we may see this continue to rise higher. So this is a resistance level at 60.80. This is an overlap resistance level, which is where the pivot has been identified. So we could see the Kiwi continue to rise higher, and then should we see RB and Z that is somewhat neutral, right? If they don't cut rates, and it's quite likely that they are not going to raise interest rates either. So we may see the Kiwi come under pressure on Wednesday as well. So we could potentially see it rise up towards this pivot level here. And should we see RB and Z that's somewhat neutral or balanced, or maybe even hinting at a dovish outlook with regards to its monetary policy, we may see the Kiwi come under pressure, and this is an area where it could potentially stall and reverse to drop lower here, right? So first support has been identified at this pullback level here at 59.40, right? We can see price finding pretty decent pullback support here on 16th of November, and of course finding strong support here on the 1st of April. Right, so this is what we have for the Kiwi. Right, okay, let's move on over to gold. Right, when we look at the chart for gold, this is pretty much a runaway trade. Right, we can see since October 2023 it rebounded quite strongly here, going as high, initially creating a new all-time high on 4th of December. Then you can see it sort of traded sideways, right? Gold didn't do much since the middle of December till the end of February, right? It was pretty much trading sideways between 1,980 and about $2,100 per ounce, right? But then it broke out very strongly here, right, as the US dollar sold off, dollar index sold off, right? It broke higher. It has been making new all-time highs as over the last few weeks. So when we look at it on the monthly time frame, right, gold prices are indeed trading at its all-time high, right? This level here at about $2,000.70 per ounce. This was previously a very strong multi-swing high resistance, right? We can see price running into resistance here previously on 3rd of August 2020, running into resistance once again on the 1st of March 2022, and then for the third time on 1st of May 2023. So this was like a multi-swing high resistance, a very strong resistance area that was respected all the way up till recently, right? Even on December of 2023 we did see price breach this multi-swing high resistance level here, but it wasn't a sustained move. It actually pulled back over the next 2.5 months before finally breaking out higher in March, right? So gold is indeed trading at all-time highs. It does not appear to have any major resistance. So how did I identify this pivot point and the first resistance, right? So when I look at the chart on the weekly time frame, I think let's do it on the monthly. It'll be easier to explain it and to visualize it on the monthly time frame, right? Okay, right. So as I mentioned, with price trading at all-time highs, right, we don't have any other previous pullbacks or swing high resistance levels to reference. So we have to simply rely on Fibonacci retracements to help us identify potential resistance areas, right? So the first one is a Fibonacci extension at 161%. So I started this extension here, or rather this retracement from here, 1st of March 2022, this swing high here, ending with the low here on the 1st of September 2022. You can see that the 161% Fibonacci extension level sits at around $2,351 per ounce. It is also an extension level that aligns pretty close to where the 78.6% Fibonacci projection sits. Right, this 78.6% Fibonacci projection was found by starting from here. First point starts from 1st of August 2018. Second point ends here at 3rd of August 2020, and the third point ends here on the 1st of March 2021. So what we have here in this region between 2,350 and 2,400 pretty much is a Fibonacci confluence, right? Fibonacci confluence simply means we have more than one Fibonacci level at a particular price zone. So in this case, we have the 78.6% projection and the 161% extension level to help us identify a potential resistance area for gold prices here. So take note, XAU USD is the instrument for spot gold prices. We can see that over the last 2 months, this has been a very strong bullish move in gold, and potentially it could run into a little bit of resistance in this area that has been identified by the extension at 161% and the projection at 78.6%. So this is the pivot level here that has been identified where we could potentially see gold prices stall around this region, right? To identify the next potential resistance level should this pivot not hold, then it's been identified by the 100% Fibonacci projection. Remember, Fibonacci projections have three significant levels. The first one is at 61.8%, which is probably around here. Then we have the 78.6%, and finally we have the 100%. So first resistance has been identified at $2,595 per ounce here, right? As I mentioned, gold is trading at its all-time highs. We have no other pullback resistance or swing high resistance to reference, so we have to rely on Fibonacci retracements to help us identify potential resistance areas, right? So dropping down into the weekly time frame, right? So we can see that this is how we've identified the first resistance. Support is pretty tough to identify as well. However, when I look at this level here at 2143, this is a pretty decent overlap support level. Why do I say that? Previously, this level here functioned as resistance, right? Price running the resistance here on 4th of December. And as price broke above this level, this previous pullback resistance on the 4th of March, it did find a pretty decent support here on the 18th of March to create an overlap support level here. So in terms of support, first major support for gold prices, I see it at around $2,140 per ounce. Right. In terms of intermediate support, perhaps we are able to identify something on the daily time frame. This is not the best level, but maybe this level here at about 2,222 could be could be a level that we can potentially identify as an intermediate support. I say intermediate support because I'm not very convinced by the significance of this level here, but we may see price find a little bit of support should it pull back towards this region here. Alright, okay. Alright, I think we've covered all the requests as well as covering the major currency pairs, and of course those that are related to the upcoming central bank announcement this week, right? We still got a little bit of time, so let's just wrap up the analysis with oil, right? So XTI USD is the instrument that tracks WTI crude oil futures. When we see crude oil prices rising strongly since February of 2024, right? We see a very strong bullish rise in WTI oil, right? Part of this is also a combination of the geopolitical risks and tensions in the Middle East, in the Red Sea, right, affecting shipping lanes, also potentially affecting production supplies within countries in the Middle East that are currently experiencing geopolitical tensions, right? So, and also we are seeing pretty decent demand for crude oil as well. So all of these factors have summed up to push crude prices higher, especially with WTI oil breaking above what is this, $87 per barrel last week, coming very close to $88. I think it may have breached $88 last week. I think it may have, oops, no, not yet. So it's just it has broken above $87 per barrel, but not 88, not just yet. Right, okay. So in terms of analysis for the WTI oil on the daily time frame, right? The pivot point at $90.36 per barrel has been identified as a pullback resistance here that occurred on the 19th of October 2023. This is a strong resistance area, right? This also is a very strong resistance area. It's also bounded by the 78.6% Fibonacci retracement. Right, so we started this retracement here from the 28th of September 2023 and ending it here with a swing low on the 13th of December, right? So this strong resistance area here bounded by the 78.6% Fibonacci retracement, as well as this pullback resistance here, has been identified as our pivot point, right? So we are likely to see crude oil prices continuing to rise higher, right? And where it may finally run into strong resistance is this zone here, which has been identified by the pivot. First resistance is quite clear. It's at $94 per barrel. It's this swing high resistance that occurred here. This is a very where's my brush? Here we go. This is a very significant swing high resistance that has occurred on towards the end of September 2023. All right, okay. And if I were to try and identify some sort of intermediate support for crude prices, right, when I look at $86.80, previously price failed to break above this level here. You can see this was functioning as a pullback resistance back in October of 2023. After price broke above it, it could potentially act as a potential pullback support here. Once again, I'm not very convinced by this level here, or the significance of the support level at 86.18. That's why I'm just highlighting it as an intermediate support. Where I do see really strong support is at $83.22. Right, we can see of course quite clearly this was the previous pullback resistance that occurred on 19th of March. It was also a resistance area back in early November, and of course price found pretty strong support here in mid-October as well. So this is a very significant overlap level here, which has been identified as the first support. Right, is there a Fibonacci retracement? Let me see if there's a Fibonacci retracement that I can draw. Let's start one retracement from here. 5th of Feb going up to the high. Do we have anything that aligns well with the first support? No, not exactly, not really well, so I'm not going to force the Fibonacci here. Let's try if we start from this swing low here, 13th of December. Alright, we've actually got a 23.6% that aligns pretty well with the first support, so let's just keep that on. Right, okay, so this is what we have here. Alright, okay. Alright, as we come towards the end of today's webinar. Alright, thanks everyone for tuning in. I hope this we have a great trading week this week, right? We've got quite a few things lined up, so before we wrap up, let's end the session by looking at the calendar again. Right, take note, these are the key events for lined up this week. Right, we've got 3 central bank announcements. We've got the RBNZ on Wednesday, 10th of April at 2 a.m. followed by the Bank of Canada later that day at 1:45 p.m. GMT time. Take note, I'm on GMT time here. We've also got the press conference by Governor Tiff Malcolm at 2:30 p.m. GMT. And then finally on Thursday, we've got the ECB that will announce its monetary policy statement at 12:15 p.m. GMT time on Thursday, followed by President Christine Lagarde's press conference at 12:45 p.m. In addition to these 3 central bank announcements, we've also got inflation data out of the US. We've got CPI data on Wednesday and PPI data on Thursday as well. Right, take note, we are seeing a potential re-acceleration in CPI on an annualized basis, right? Especially when we see the estimate for March, right, indicating an increase from 3.2% to 3.4%. Remember, this is March here. This February's result at 3.2%. We are potentially seeing March coming at 3.4%. So this is highlighting a potential re-acceleration in inflation in the US. And especially if we look at the monthly figures as well, if the core data and the headline data come in higher than the respective estimates, right, we may see a return of the dollar bulls. So this is a potential catalyst for the dollar index. If we see inflation data come in hot, that means it comes in higher than the respective estimates. This is likely going to trigger a return of the dollar bulls, which means dollar index is going to rise higher. Conversely, should we see soft CPI data, then we may see dollar index sell-off. However, if we look at the recent ISM reports, right, we have the ISM reports for manufacturing and services. When we look at the prices components of these 2 reports, they have been elevated and have continued to expand strongly, which does seem to suggest that this inflation in the manufacturing and services sector is likely to feed back into the consumer price index as well. So take note, right, if we do see inflation data come in hotter than expected this week, is likely to trigger a return of the dollar bulls. Right, and we have the RBNZ up on Wednesday. They've kept their cash rate on hold at 5.5% over the last few meetings. It's quite likely they're going to continue to do the same. That means they're quite likely to keep their cash rate at 5.5%. Why do I say that? Because part of the reason is inflation is still sticky in New Zealand, right? On the left we have CPI data, and on the right we have core CPI at an annualized basis. Although over the last few quarters it has trended lower, but it's still well above their target of 2%, right? We can see headline CPI is probably around 4.7%, and the core is probably around 4.4%. Alright, then we have the Bank of Canada, which has kept its overnight rate at 4.5%. They could potentially cut rates this week, right? part of the reason would be inflation has eased quite significantly in Canada, and we see both the headline CPI on the left and core CPI on the right edge very much closer to their target of 2%. This may be just enough for the Bank of Canada to potentially cut rates, or if they do not cut rates, they may lean very heavily on the dovish side. Right, and finally, we have the ECB that has kept its rates, main refinancing rate at 4.5% over the last few meetings. Similarly, when we look at inflation in the euro area, it has dissipated quite strongly. Right, we see both headline CPI, which is on the left, and core CPI on the right edge ever closer to their target of 2%. This may be enough for President Christine Lagarde to and her policymakers and her fellow policymakers to potentially cut this week. If not, they may very likely lean on the dovish side as well. Alright, thanks everyone for tuning in today. Do look out for all upcoming webinars by IC Markets for the rest of this week. And before we end, we'll just go through the final disclaimer. Alright, please take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Alright, thanks everyone for tuning in today, and do look out for all upcoming webinars by IC Markets for the rest of this week. Thank you and have a great trading week.